Welcome to your trades the week ahead, and what a volatile week it has been. So currency fluctuation, equities actually mirroring that. We had it all.
Oh yes, indeed, and commodities too. So it was a very volatile week. I think the last 2 or 3 sessions, including the expiry, were fairly good for the equity markets at least.
Oh yes, saw a leg up coming in on Thursday and Friday, though Friday as well was marred with its bit of volatility. So there you see, it's almost a V-shaped graph that the Nifty as well as the Sensex saw, closing in absolutely flat. A smidge in the red for the broader markets though. Sectorally, all sectors, barring perhaps health and FMCG and to an extent metals, they held out. But besides that, it was all a sea of red. The gainers, Sasagoa had a stupendous show. Dr. Reddy's, TCS, HCL, Ranbaxy, Ambuja and Hero MotoCorp were your gainers. On the flip side, the losses were pretty prominent for Tata Steel, Grasim, Hindalco, as well as JSPL.
A note there on TCS, it crossed the 4 lakh crore market cap mark. That's huge. It's the largest market cap in the country now. A stellar show by this one for this week, as also some of the other IT names, as Aisha said. Financial technology is disappointed, and I think more so on Friday's session, and it will have a big impact on how the stock trades in the coming week as well. 15% for the week, led largely by the losses that came in on Friday's session. That aside, a stock in news was Hexaware. That one definitely stayed in the news, and a lot of other small and mid-cap stocks were fairly active. So there were block deals in stocks like Gujarat Alkalis and a couple of others, or some mid-sized stocks like for example MRF, and some of the tire stocks were in news as well. So lots of stocks in news, lots of stocks remained volatile for the week, and very interesting to get in from a sense from our guests as well as to what to do with some of those large caps as well as mid caps going ahead. To talk about that, the market view as well as what to do in the week ahead, we are joined by our experts Mitesh Thakkar and Ashish Chaturmoda to give us a sense of both the technical and the derivative picture. Gentlemen, thanks so much for joining in. Mitesh, volatile week, ending flat, but is the bias upwards? Do you think early next week or probably for the whole of next week we could inch higher?
It does look like that, Neeraj. What we've done is that during the week we did go down to about levels of 5120, bounce back strongly from there, and I think today, despite the fact that it's been kind of slightly choppy, I think the next week possibly should be very good, and we might see continuation of this up move. My sense is that 5520, 5500 is some kind of minor supply zone, but I think once we start getting past those levels, I think 5650 is where the market could head towards, given the fact that the rebound appears to have been catching more steam in the last couple of trading hours. Ashish,
do you have a currency strategy? The last one that you gave worked beautifully. What do you do for the next week?
See, Neeraj, we believe that, as rupee is gaining some momentum in last 2 trading sessions, and once it breaks the 66 levels, then there is a very high possibility that we may test somewhere around 64.50, 65 levels in a very short span of time, and that's a view which we are holding on the index as well, because, the kind of volatility which we have seen at a lower end, and from there we have seen a very strong bounce back. So we expect the strong momentum to continue in the index, Nifty index, and which again, gives a very, a clear-cut view on the USD INR also, where we believe that if it fails to cross 67.50, 67 levels, then there is a very high possibility that this week we can see levels below 65 to 64.50 in a very short span of time.
The other data point, of course, on the macro front is the GDP numbers. Poonam's here with a quick perspective.
Well, Aisha, first quarter GDP is likely to be weak at 4.6% is what ET poll suggests, but the best case scenario is 4.8%. Again, the consensus expectation is right in the range of 4.3 to 4.9%. The only silver lining being coming from the agricultural sector, because of the good monsoon as well as better realizations for the winter crop, we would see some support to the GDP. The industry segment growth is likely to be very much muted during the quarter. The mining and manufacturing will contract some support from the electricity segment, and also the construction segment is likely to grow 4% YOY. In terms of the services output, that's going to be below the trend levels that we have seen in the last few quarters. The last few quarters, the services segment had grown nearly 8.5 to 7 odd %, but this time we are going to see muted service segment growth again coming in. The government spending has been very little during the first quarter. Even that is going to impact the GDP, and of course we saw higher trade deficit numbers during the first quarter. In terms of the future outlook, besides the global concerns, the concerns remain on the weak rupee, high crude oil prices, high retail inflation, as well as the twin deficits. Some positive improvement is likely in the CAD towards for FY14 2014, but as of now, if the interest rates, high interest rates rather, slip into the second half of the fiscal, it would pose a great risk to the overall GDP growth. And unless and until we do not see a good amount of structural measures coming from the government, the weak sentiment is unlikely to improve. As of now, a weak first quarter. Hopefully we see better times during the second half.
Poonam, many thanks for joining us and giving us that update. The usual suspects that could react, Mitesh, to these numbers would be the capital goods space or essentially the investment phase. What do you do with the likes of Larsen & Toubro or a BHEL coming next week?
Neeraj, I think, BHEL technically still is positive in the sense that it went through a deeper correction and now is trying to bounce back. It needs to get past 123, 124 to complete a bullish price pattern formation. Once that happens, I think 144, 145 was the target which I'm looking on the upside. So after 124, you got about 15-16% kind of an up move which can happen in the next few weeks to combine. Therefore, September expiry could be very good for BHEL. But the pattern kind of breaks out above 124. L&T still looks, to me, I'm not sure whether we'll see a significant or a sustainable reversal over there. You might get bounced back by some kind of short covering. But I think between the two, if I had to choose, I'll choose a BHEL.
Mitesh, want to get your views in on the metals pack, considering you've been pretty bullish on this. Anything that you still like for a buy?
See, I think I pretty well like the entire metals pack. I think what's done in the last few days is that after having one leg of the rally complete, it's just kind of settling down at higher levels. So I would still be looking at buying into Hindalco if it comes down to about levels of 100 to about 101. Similarly, a JSW Steel is very close to the area which I want to buy, which is around 530, 535. I think, if these stocks manage to hold on to these important intraday support levels and then bounce back, we might see the uptrend or the up move kind of catch acceleration in the next few days.
Ashish, you had a good call on TCS earlier this week, but how do you play the IT stocks for the week ahead?
See, Neeraj, looking quite strong. If you look at last time recommended TCS around 1800, and still we find that if you look at the overall open interest build up in most of the IT space in the September series, they have seen a very strong positive rollovers, and particularly counters like TCS, Wipro and HCL Tech, which are at their all-time high, and despite that we are witnessing a very strong rollover. So that gives a sense that these stocks may continue their uptrend from the current levels as well. Even if you look at Infosys, around 3000, 3100 levels, we are witnessing a very strong build-up of positions. So I think this is also one stock where we may see upside till 3350, 3400 kind of levels. In the mid-cap space, as mentioned, like Tech Mahindra is one counter which is looking to hit its all-time high. So I think another 7 to 8% upside is possible from current levels in the IT space, and we may witness this kind of momentum in the September series itself.
The one space which continues to reel under pressure, though, has been the banking pack. Let's just put up the Bank Nifty for you and show you how it's performed over the week. And of course, individual names have really borne the brunt. That's the Bank Nifty futures. Again, pretty much mirroring the market move and closed in with losses of about almost 4%. Mitesh, what's the level that you're eyeing out now on the Bank Nifty?
See, in fact, the Bank Nifty remains one underperformer. I think, what it might do is that after declining from levels of around 11,000 to about 8,500, I think it might find its feet around these levels. The indicators have started to turn flat, which typically means that some kind of range-bound activity might happen. I would look out a range of about 8750 to about 9400 over here.
Okay. Any Ashish, I was just looking at your recommendations. We'll come to them in a bit. But any sell calls on any of the banking names?
See, definitely Bank Nifty looks quite weak as compared to the overall broader market, but as we are expecting a good pullback in the Nifty as such, so I think as of now, definitely I will not like to go short in banking space. But if I have to pick one counter as a long counter in the banking space, that would be IndusInd Bank. Now, if you look at IndusInd Bank, this stock has formed a very good base around this 450, 460 kind of levels, and the kind of build-up which we are observing in last 2 days, it seems that there is some amount of buying interest emerging into the stock. So we are expecting 30-40 rupees upside from current levels in a short span of time, and purely based on a short covering, I think this stock can target 385, 390 zone in next 3-4 trading sessions. One can keep a stop loss below 350 for going long in the stock.
Let's also get you some trading ideas for Monday morning. Ashish, want to get you in first. What is it that you would recommend to our viewers?
Our first pick would be Reliance. Now, if you look at Reliance, has given a very good breakout on its daily and weekly charts above 835 levels. And during this breakout, we have observed a very strong volume participation. So, we are expecting a target of 880, 885 in a very short span of time. One can initiate a long position, keeping 835 as a stop loss in the stock. The second pick, which is on the long side, is Dr. Reddy. Now, if you look at Dr. Reddy, this is one stock which has been continuously consolidating during the market fall and has now shown some momentum on upside. So, we are expecting the stock to cross or test at least its all-time high, which is around 2400 level. So, we are expecting a target of 2400 to 2450 in next 4-5 trading sessions in Dr. Reddy. One can initiate a long position with a stop loss below 2250. And the other pick would be in the banking space, whereas I mentioned about IndusInd Bank. Now, if you look at IndusInd Bank, this stock has formed a double bottom formation on its daily chart. So, we are expecting a target of 485, 490. One can initiate a long position by keeping a stop loss below 450 levels.
Okay, thanks for that, Ashish. Mitesh, what about you? What are you recommending for next week?
See, Bajaj Auto was a very strong mover. It's kind of moved up from very important support areas of 17, 30, 40. And has given a buy signal, so I think I would expect it to go to about levels of 1900, which is the 200-day average. Now, I would recommend it buying with a stop below 1800, and I've got a buy on Divi's Lab. I think that's a stock which is just starting an up move. It's been an underperformer, but the signals are that we might see start of a move which can sustain for some time. I think the daily and the weekly charts are showing as much. So for the first target, it would be around 1025 is what I would look for this stock to hit, and would recommend this buying with a stop below 975.
Okay, Mitesh as well as Ashish, good to have you guys on board with us. That's a wrap then on this edition of Your Trade.